So, there's some options and two main categories, IDR versus fixed. So let's dive into those a little bit.
Yeah. So there's a lot of different student loan repayment options. So we're going to kind of go high level and then give you the major options within them. So the first two major categories are the fixed payment repayment plans and then the income driven repayment plans, so the IDR plans. So the big difference between these two, the fixed repayment plans are pretty straightforward, just like they sound. They are based on a kind of a traditional loan sort of setup where you've got a fixed term, you've got your interest rate, and then your principal balance. So within the fixed repayment plans, there's a couple options. So you can have a graduated or extended loan, which in those cases, your payments might be a little bit lower at first, but then they get a little bit higher. But the key thing to note here is none of these plans on that fixed repayment schedule are based upon your income or your family size. So they are really just looking at the principal balance, the loan term, and the interest rates. So this is actually the plan that nobody wants to end up in accidentally, right? Because you typically can find that your payments might be a little bit lower under the income-driven repayment plans or the IDR plans.
Right. So the income-driven repayment plans, they base your monthly payment amount on how much money you make and your family size. So for eligible borrowers, payments are generally 10 to 20% of income, with the remaining balance forgiven after a 20 to 30-year period of qualifying payments. So that's going to be best suited for people with high loan balances and lower income, or frankly, just super high loan balances.
Mm-hmm. Yep. And within the IDR options, there are a few more kind of selections you can make. So right now there are 4 repayment options, but we're only going to talk about 2 of them on today's show. The other 2, so the income contingent repayment plan, or for short ICR, or the pay-as-you-earn, or the PAYE plans, they're going to be fully phased out on July 1st of 2020.